Good morning, everybody. It's Monday, September 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn down a half at 417 and a half. January soybeans were down 7 at 1076, and December Chicago wheat was up 5.25 at 585 and a quarter. This morning, the USDA announced an export sales announcement of 116,000 metric tons of soybeans to China for 24. Good morning, guys. Hope everybody had a nice weekend. We've got USDA quarterly stocks out here at 11 o'clock this morning. We were talking a little bit before the show. This is an interesting one. Hard to get an overriding opinion either way. You can see huge swings. So, Dustin, maybe a few thoughts to kick us off here, beginning of the week, and then we'll throw it around the room.
Yeah, good morning. So quarterly stocks is a huge report, September especially, because it's a final count for the year of where we ended up from the 23 season going into 24. And what's interesting about this one is like the June stocks report was extremely bearish. That came out June 28th. We had more stocks than we expected. About, I think it was like 890 million bushels more of corn than what had been the prior year coming into that. Surprised everyone. We also found more corn acres than expected in that June report. They subsequently had to reduce those corn acres after they counted FSA acres. But that was kind of our major drop this summer, right? It was June 28th report, and a lot of it was stocks. So we've since had a lot of really good export demand. We've had really good ethanol crush demand. And of those 890 million additional stocks in June, about 810 million of them were on farm at the time, which is kind of a messier count that you would say. So, a lot of that's transferred ownership going into September 1. And that's where, the buck kind of stops here. If we are closer to that 2 billion bushel carryout versus the 181, I think the WASDE was projecting, that would be very bearish, right? And then, of course, if the on-farm storage numbers were recorded in error in June, that high print, and we come out sub 1.8 with all this extra demand, it could be very bullish. So it's just going to be, I think it could be a bigger report than a lot of people are thinking for corn in particular. I think the bean numbers, we're definitely going to look at a fairly large carry in from the prior year. The corn number is still kind of both sides of it. Now, I will say we did hear a lot of, cash carry situations, first half SEP, second half SEP in coming in from the East. So, I do believe there's a lot of corn carried in from the prior year, and the market, especially in the East, was kind of flooded with that old crop corn coming in. So I don't think there's anything that is obvious that there might be some sort of miscount coming into September, but just want to relay that it is a fairly volatile outcome we're expecting today.
Well, it's interesting to note too. I mean, you talk about corn specifically, you're in some really key areas here, technically as well, that 423 to 418 type of level. And so you see some of these moves on reports and they can change your charts a little bit. It's can get interesting. Justin, a couple thoughts there.
Well, just, to Dustin's point, the, June 28th report, we settled at 420 3/4. So we're at that level basically within 2-3 cents. So, we've made this big, long extended kind of low. We're trying to see if we can start, I think if we start getting back above those numbers, I'd say the market kind of digested a lot of that. So it'll be interesting. We've obviously we've talked about this a lot of times. We got, sub $4. We picked up some good demand. Now we're kind of trying to still figure out the yield. I still think we've traded the high upper end of yields when we were making those lows sub $4. We're seeing yields, obviously start off strong. I from what I've heard so far, as we've gone into, a little bit of later stuff, the yields kind of slowly been coming down, still really good, but not record yields in some areas. So maybe we've digested the most bearish part of everything. The dollar is obviously, gone down a bunch. There's been just some, kind of more macro positive news, I think, for commodities. Funds have covered a tremendous amount of shorts. Farmers had to, get out of a lot of longs, so we've had that big change of ownership that we talked about, going into harvest, especially with the old crop supplies. So I think we're getting into a more balanced, kind of healthy area in the market. And I think now we're trying to see direction from here, South America, all those kinds of things we keep talking about. But as far as like balance, I feel like the market's in good balance and kind of trying to see what the next set of fundamentals, where we want to go from here.
Yeah, it's interesting. I mean, you're kind of a net short, like 76,000 contracts of bean, which is smallest since the beginning of June.
Mm-hmm.
So you could tell like they're going to make an opinion here, at some point.
Yeah, there's a lot of bullets, right? So if, I think if, let's say it starts raining in South America really good, China's obviously been trying to stimulate the economy. So there's a lot of kind of things here that makes sense that you would get on the sidelines if you were kind of a big player and just see what, maybe even through the elections, see what you think on future direction. But I don't think there's anything obvious here that's would make you want to be record short or record long for, if you were a managed money type person. So
under 40 days for those keeping track at home.
Yeah.
So
yeah.
We're getting there.
Mm-hmm.
Ben, what's on your mind this morning?
Yeah, I think, today is one of those things that's, I don't play a lot of cards, but I think you refer to today's report as kind of the river card, right? Like we're going to get one flipped on everyone. And it doesn't really matter what you have. That today's card could change the whole outcome. I look at it as we have a really pretty strong building technical base, but we're heading into a harvest that's one of the largest crops ever had, maybe the largest. I don't even know, top one or two. Did we have a kind of a synthetic low from all the purging of bushels that we saw in late August and September? Right now, it would appear that we did, but I think that between today and Wednesday, we may possibly negate that. Interesting thing is, typically, if you make a long-term low or long-term bottom, you almost always will re-challenge that at some point. And we didn't have a re-challenge of that 85 low in D's. We traded 85 on a low back-to-back, and within just 4 or 5 days, we were trading back above $4. And you look at some of the things that are going on with stimulus in China, certainly a need for U.S. corn, I think later in the year, January, February, March, as we have to fill some minor shortcomings around the world. I think that becomes interesting. I just think in the short term, we've got to digest quite a bit here between this report, the October report, and seeing if we can handle logistics with a potential strike along everyone from the eastern seaboard all the way down to New Orleans for longshoremen. So we could have a lot of the right things in place and maybe kind of get gut punched for the short term if some of the negative things play out. Good, big crop, high yields, but we can't perform for export. Things back up. We had the river levels to be concerned with. Now we're kind of transitioning to potential strikes. So I'm just a lot of humility going into this report. I think it's one of the hardest ones of the year.
Yeah, and to the river point, Ben, they're saying the Mississippi is going to be up 15 feet.
Yep.
So you did a little bit of fixing up there for at least the near term. Yep. So maybe you do see some stronger movement there. But
it's unbelievable that we go from fixing that into a potential strike, right?
Right.
Well, and they fixed it, right? But it's those levels. So from the hurricane, I mean, those go back down pretty quick.
Yeah,
because we're not getting the moisture up north to drive it down. So
the West is going to be very dry. I mean, in the next 2 weeks. So
yeah. To Ben's point, I mean, you could write a scenario pretty easy to go make new lows or that you put in the bottom, and that's kind of this pivot area that we're at. Because there's not, the second, we talked about, Ben, I think we talked about this Thursday, but the East kind of filled up with old crop stocks. So space is going to be a problem second half of harvest, along the river system where the best crops are. So you got to be kind of open-minded here on what, don't get lulled to sleep either. If you've got really big yields and we've had this rebound in prices, like it's a huge revenue change for a lot of guys between, what's happened today and, middle of August, with a bump in yields for guys and a bump in prices. So.
Yeah, just from the east, that was kind of the area that was of concern when we talked about trying to extrapolate national yield. And we're nowhere near last year in Ohio, but it's not catastrophic with the exception of far southeast Ohio, which is really bad. So I just think we still have a big crop out there that we've got to work through. We did have significant amount of damage from the storm. There was a lot of corn that was laid over south of I-70. And, in talking to producers in that region, they're more frustrated that it's going to take them forever to harvest than seeing really meaningful yield drag, maybe a little bit. But I do think that they're still seeing yields better than they had anticipated back in late August, early September, but certainly not to the levels that they saw the previous year, which was a record in Ohio. And Indiana's been very good so far.
Very good. We'll be back also at 11:15 today to discuss the USDA report and have our initial reactions there. So guys, that'll wrap it up for grains here this morning. Ryland, looking towards livestock, pretty big fund buying towards the end of the week, last week. And then, in spite of those heavyweight hog inventories, pretty quiet trade across pigs. So what do you got for us to start the week?
Yeah, it was just kind of a mixed old Friday for the meats. I mean, the hog and pig report was kind of widely regarded as neutral, but yeah, the heavier weight groups obviously kind of kept that kind of bear spread mentality kind of going into the end of the week. So, you had a pretty wide range trade in the hog market, but obviously the managed money really wants to be long in the meats. Maybe it's a broad brush commodity thing. Maybe it's just a seasonal thing. Could be a demand thing. But I mean, it does seem like there is a little bit of teeth to this. So on the livestock or on the live cattle side of things, you had a $2 to $4 higher cash market. You had bigger kills than expected. Even with the price of beef falling, we've been seeing packers reach, and it sounds like they were getting pretty aggressive even in some kind of the fringe areas too. So overall, it seems like demand is still really strong on the packer side, even though margins are probably pretty strained, at this point. So just kind of watching that. I mean, I think we digested most of that good news last week, but maybe we can even see some more follow through at this point. The funds aren't holding massively long positions. They're just kind of mediocre, I would say, just kind of could go either way from here. So I think that's kind of a risk just going into the tail end of the year when usually you see wholesale markets, pork and beef markets start to kind of trend lower, which we've been seeing in both places. It's just cash markets have stayed relatively firm. Did see a little bit of pressure on the hog side of things. So yeah, I mean, overall, it just seems like there's a big speculative push to stay long right now. And it's kind of defying, at least on the hog side, it's kind of defying some of the major movement on the pork and the cash side. But overall, it just seems like it's possibly a demand situation. Maybe the market doesn't see the full picture yet.
Well, very good. I appreciate the update there. Once again, to reiterate, the USDA quarterly stocks report will be out at 11 o'clock Central here this morning. We will be back with you at 11:15 for a bonus War Room segment to discuss the report, give our reactions, and talk about where we go from here. If you enjoy the show as much as we enjoy putting it on, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to date on everything AgYield and let you know when all the content's coming out. So once again, we appreciate everybody that takes the time every day to watch the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a good start to the week, and we'll be back here at 11:15 Central for the USDA reactions. So we'll see you then.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.